All right, continuing on with chapter 3, we're on to topic 3.2, where we're going to describe the expanded accounting equation. If you remember back in chapter 2, we talked about just the regular accounting equation. So we said the accounting equation explains the relationship between a company's assets, liabilities, and of course, equity. And it is expressed this way: assets they're equal to the sum of a company's liabilities and owner's equity. And in that previous chapter, we defined assets and gave examples. We defined liabilities, we defined equity. So if it helps you, if you need a refresher, go on back to the book or to that video. All right. And then a shorthand way I gave you, or that I like to give students, is just aloe, right? Like the plant, aloe. It's a shorthand way. So basically it's saying that all of a company's assets have to be equal to the claims against them. So either the claims are coming from external creditors, right? Your banks, your loan officers, or from your owners, right? And the ownership depends on if it's a sole proprietorship, partnership, or a corporation. In chapter 3, we really focus on that corporate form of business structure. Okay, so that's what I'll illustrate our accounting equation with, is a corporate formation. All right, so that changes just a little bit. Assets equal liabilities plus stockholders' equity. Stockholders' equity. Okay. If you still want to call it owner's equity so that it works with our little, aloe, that's fine with me, because the stockholders are the owners. Okay. Now we said that we were going to expand this equation. So let's go ahead and expand it. And there is a nice illustration of this in the chapter as well. All right, so when we expand it, we expand this equity part right here. Okay, so let me write this out. Stockholder or owners equity. So owner's equity is made up of two main items: the investments that the owner makes. Okay, so I'll say owner investments. Okay, and retained earnings. Now, because we are using this corporate, corporate terms, like I said, owners become stockholders. And owners' investments, we call that common stock. Okay, but I tell students it's the same thing because they get thrown off. You'll see in chapter 3, it'll say owner invested $50,000 cash. And you're like, okay, well, that's impacting cash. And what's the offset? Common stock. Okay. All right, let's continue to expand. So retained earnings is made up of the sum of dividends, revenue, and expenses. Dividends, if we were focusing on a small business, like a sole proprietorship, that would be called drawings or withdrawals. So owner withdrawals or owner drawings. But using that corporate speak, it's called dividends. I'll put it in blue so you know that's the corporate term. Okay. So there's our expanded equation. I will maybe clean it up just a little bit, and then we will do the second part of this, which is to explain the accounting equations relationship for when we analyze transactions. Okay, so we'll do that in the next video.